Hello, 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 everyone. Happy Options Expiration Friday. May it be a wonderfully interesting day. Targets are getting hit on the double. So let's see. Let's get this ball rolling to get through some markets. Good morning, Sashi. Good morning, Jacob. Happy Friday, Josh. Good morning, Options 22. Got all your emails. Thank you. Good morning, Christo. Christo bought the dip. True trillion will be what I'm really focused on about the one just over 1 trillion for S&P. That's going to be the key. That's going to be the key. Patrick, happy Friday. Are we expecting huge volatility? It depends where we're trading and relative to some key strikes. No, so far the VIX is very muted this morning. Good morning in terms of move, not in terms of level. Grand Rising, Christoph. So we shall see. Good morning, Martinez. Good morning, George. Hey, MJ. So today we got Fed Williams speaking in about 5 minutes. We got rig counts for crude traders. That's about it. Stock market mapped, coming back a bit. Trying to put a floor into this thing. Coming back down to that 3650 area before, which is a pretty key strike price for gamma. Put gamma. That's what I wanted to say. Was a little red. Let's refresh this to see. Energy is now back to pretty much neutral. The reds are slightly dropping off going into the open, but nothing major. 75% for that, pretty much guaranteed in the bag. 75 basis point. We are still in negative gamma. I am watching this 3650 area. If we get a rally on 3675 is very minor, but the big magnet is 3700 if it could get a rip your face rally on. Other than that, 3650, 36 is more minor. 3650 would be the bigger magnet right around there, and then 3700. Fear and greed still in fear. Earnings, American Express down on guidance. And Verizon, I saw some numbers roll by and didn't get a clear read on them. So I have to loop back around to that. Again, the little more Fed potential dovishness. I just think this is going to be now Verizon down 4%. Bouncing back, I'd really focus based off this where it found some support today. We'll go into the open, but I'm keying off of the return to this key area where it resided a lot of yesterday, and based off this snapback move. This snapback move, which, you know, we're still doing that 70. This is all just insane. By the way, I would be aggressive moving down the stop level. It's close enough to that target and the 50% level. But that 3,700 overhead, that is going to be the magnet price. So just seeing if there's anything else earlier. I mean, we had the big, here's your big reversal in the dollar over the last few. I mean, we were really marching up on the dollar. Coming out near the last peak, and everything in the last few minutes has reversed. But, I mean, I'm not seeing this as super dovish. I just think we're going into option expiration Friday with that 3,700 magnet price. So overall, the pound was trying to break down, hit this 1070 area. I'm still focused on, after today, another rollover move. The euro still caught within my favorite, being facetious, triangle pattern, but really can't do anything until above 98.60 or below this. It's really got to break down, not just a triangle, but below 97. Other than that, let's just get to the key markets. Again, based off this bounce going into the open, only 15 points away now from the 3,700. Going to be really focusing on that 3,700 area. On a, let me bump down this because I'm going to be, I'm going to be bumping down the stock if I can grab the right one. Come on. There we go. So the closing basis now would be 37.26. This is close enough, especially for a stop lowering. As I've talked about before, the trade through would be, funny enough, yesterday's high or yesterday's morning high area, 73.43. NASDAQ. We're just using these targets still. By the way, that mini double was off the table, never triggered. The NASDAQ don't have a major strike level in this, so I'm not keying off of anything going into OPEX with that. With that, just going to lower this for now. Retracement key areas on a continued rally. My minor is going to be this 11,121, 11,183. And then 11,245. Key support coming back in at 11,000. 10,997, 11,000. Can't get overly bearish unless we break below 10,980. Yeah, it's got this over any narrative. And we're still in that major buy the dip. Hello, Vertical Dimension. Hello, Christoph. How can we as common people stop yields from rallying to stupid levels when we go long? What do you mean, stop yields rallying? You're not going to, the yields are going to go where the yields are going to go, and currently it's in a pretty substantial downtrend. We had the nice little bounce back, but this was a pretty major move. I mean, it's not necessarily the levels we're at. Also, it's this velocity of this breakdown. Once we broke below 110.17 in the 10-year market, this was pretty substantial acceleration over the last 2.5 days. That's what's key. And look at the yen. I mean, the yen... Sorry, that was the yen bond yield. I mean, this yen is on a month. I can't even get decent pausing bars, and we already hit this 151.65. This is, after it paused here from their intervention highs, this was a crushing move to weaken the yen. It's this rate of increase. So that's what's really could snap the market. It's not necessarily the absolute value. That is a little to play in it, but it's this rate of change, which is really going to cause some instability. And the instability is growing now, especially now it's growing. If we look at the yields, so you're not going to try to stop something because you're long or short. You're not going to stop the moves. The moves are going to be, your goal as a trader is to position yourself in sync with the moves. As you see here, what did we hit earlier? 433 in the 10-year yield, pulling back a bit. Don't even have a decent pausing bar here. You can see this last 3 days of the yield rise. This is major. I mean, running from the pause just slightly above 4% to 4.3 in a 10-year in 3 days is very key. So that's what's more interesting about starting to potentially snap some stuff, is this rate of change. Good morning, Sterling. Good morning, John. Good morning, Gary. Like the 10 and 2, if small traders short it, doesn't it affect the price? Not really. The treasury market is so huge. As a small trader, nothing. It'll easily absorb that. The treasury market's way bigger than the stock market. Remember, the treasury market, That's where you get the disconnect. I'm still surprised, even with this little pause in the 10-year notes. I mean, yield's still climbing, but the market's shrugging off, in my opinion, a lot of the what's going on in the bond market, and the bond market's pretty much generally long-term correct. Okay, yeah. Well, I mean, this is not a big bounce after this. Easily, if even if this return to the breakdown zone would not be huge. This is where the stock market is just shrugging stuff off. What I'm more worried about, oh, we're going to pause, we're going to pivot, we're going to blah, 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 blah. At this point, with these rates of changes, something is poised to snap first. And then if they are pausing, it's because something snapped. And if something snapped, you don't want that. And you especially don't want to pivot. Where do we sit? So back to these levels. Return to the breakdown zone. On the rollover play, I'm targeting back to 36.50. Are we going to sit like at 36.75 going in the open right between 3,700 and 36.50? Roll over below 30, well, it's 36.50. It'll be interesting. This is going to be fascinating. Is going to be interesting option expiration Friday. The next levels for the on the downside 36.40, then 36.20. I don't know without some major breaking down today if we can get to that 3600, but that's more minor than this 36.50 area. We also have a lot of trades going off in here, but I will be if we start breaking down with the tick and the tick goes negative below 36.50, I will utilize these targets, especially this 36.40 target. There's some illiquidity getting into more of the treasury market now. We also have, remember, Japan, if they're going to do interventions, has to keep dumping treasuries. Now we're getting, remember people were talking about this a couple of weeks ago. Now we're getting, and I started bringing up last week, we're starting to get into much more fragile markets. And with these rates of change over the last couple days, it's getting very interesting. I am more prepared for snap moves at this point. I mean, we're going into stuff. Look at this move just in the S&P going from 36.45 to 36.85 in the matter of minutes. This is getting ridiculous, this volatility. Now, this is where this is great markets to learn in. Fantastic markets to learn in, because if you can learn in these markets, then once we eventually get the calm down again, which who knows when that's going to happen, it gets a lot easier. Dow. Targets, if we snap back down, I'm looking more at this 30K area. 30K with a 200. Anywhere in here. Remember, we can get some very interesting back and forth. You don't normally have momentum days on option expiration. It's more back and forth trading. I will be prepared in case something goes with momentum, but I'm more, and I'm not talking short-term momentum. You can get these pretty quick moves, these 15, 30-minute moves, but they tend to reverse. Key areas, 30,480, then 30,575 for the Dow. Major support coming in at 30,200. Then I would target the 30,100. I'm already tired. Russell, retesting a breakdown level, so that's going to be the target on any bullish thing. That's 1720. Above there, you're trading into tons of overhead resistance. Even though, yes, this is a clear path, you have multiple stopping points. Multiples. So this is very key to watch that. 1720, then 1723, then roughly 1727. Key support 1700, then 1695, then on a breakdown. Oh, 1691, there's a fair amount of support down there. We already looked at the notes. I just wanted to check in at this. I mean, look at these range. This is a range in the notes in the last, geez, how long was this? In the last hour? Or since 7:15, then we're just beyond 8:15, so we're trading from the lows of 108.26 and a half to the highs of 109.01. That is massive in a 1 hour time frame in the notes market. Absolutely insane. I'll get to comments in a second. You know what? If you don't have to do anything, we have the also this looked like more yen intervention. And it's already snapping back. There's going to be a move to it's going to be a destroy the yen. As it's been talked about for over 10 years. I remember people more aggressively talking about it back in 2010. The yen will blow. I'm now more on yen blowing watch. Their interventions aren't doing crap. This is going to already take out this key selling. This looks like it, though, again, no confirmation, but this price action looks like yen intervention right here. And it's already retracing. I mean, we're already technically above the 62.5 of the snap down move. Wow. By the way, I mean, I was looking at Bitcoin. Bitcoin was poised for the breakdown earlier, but then the snapback here. At one point, this big red bar below 18.7 was watching for the breakdown and already the snapback play. We just don't have much stability. Good morning, Ramsafal. I'll get the levels for the spiders and the Qs. Remember, we don't have really good double pat. We don't have fantastic patterns. Again, you got to trade off the S&P. You can see this didn't even qualify for a double for the spiders. So the levels are basically off your S&P levels. So I'd be watching major would be the 3650 area. This is just insane. This volatility going into the open is just crazy. 3650 is a level I'd use. Then the 365. If we get major push down, oof. Then I wouldn't even be at 362. This is going to be a super tactile day. I'm sorry, it's hard to do levels today. On the breakdown play, if you really get some selling pressure, I'd be using 362. You know, when I'm struggling to even I'm pretty decent with coming up with levels. Minor off the open on any selling pressure would be 364, 364.15. Key resistance, 366.50 area. Above 366.50, I'm looking at 368. Oh, this is when I'm having trouble doing levels, because I've been doing, and the only reason I say that is I've been doing this for a very, very long time. For the longer term viewers, I can come up with the levels pretty quick. This is just a nightmare. Watch on the Qs, 368.25 area. We're trading right below that. That's your overhead resistance. If you get above there, 268, can't even speak, 268.25. You get above there, there's not much You have minor. See, this is 269. And then above 269, you got 270.50. Breakdown, if we roll down, this is easier on the Qs. 267. This gap open price, which is exactly 266.84. So that's easier. You got a nice little gap magnet to the downside if we roll over. Then you have the gap levels, but I would not watch for a gap fill today. 265 would be the next level. Sorry about this, everyone. It's just one of these mornings so far. This is hard to do a live stream even this morning with this. I mean, one of the challenges. One of the challenges. May you trade in interesting times. By the way, based off this range, I will be using the harmonics based off this high or low that are established. So going into the open, about 36, 59, 50, we'll be watching for a key close below that. And then it would be the lower end, especially this 36.47 to 36.41. You can use this, especially with this range is pretty major. And then I'll use the harmonics actually line up with some key resistance points. So 36.77. And we already had a key level at this 36.83.25. And then the 36.89. Above that, I'm gravity to the 3700. But if there's nothing fantastic, do not get chopped. You know, this would be a good day to take off. Just to you know, anything you have to do to adjust positions today and then walk away and enjoy a fall Friday. Ugh. Gary, thank you for the super sticker. Gary supporting the channel. Please, everyone give a big shout out to Gary. Thank you. Thank you. Question: if the Central Bank of Japan intervenes, they sell bonds. They have a certain amount of dollar reserves, but if they have to generate more, they sell U.S. bonds, notes, and their treasury holdings. Yes. So that puts downward pressure on our treasury market, which raises the yields naturally. So yes, the continued intervention requires the selling, and Japan is still a major holder of U.S. treasuries. So they can dump a lot of treasuries, and they're not trying to dump the treasuries to break the market. They'd have to dump the treasuries in order to do massive interventions. So don't go down the conspiracy theory. They're trying to snap some. No, that's just required because that's how they hold their dollars in the treasuries. The long vol, I mean, yeah, that's what I've talked about before. The best trade is anything you can find with long volatility. Very muted in the VIX today. We're up at still 30 bucks in the VIX, but this is very narrow range. It's almost like the VIX has gone to sleep for a 1 trillion OPEX. Not a massive, that's a decent sized OPEX. Don't get me wrong, but we're not in the quarterly OPEX range. At which strike? I did not. There might be. I did not see that there was record open on which strike or total. You're welcome, Vertical Dimension or Amit. Are we going back to your other account anytime soon, or are we sticking with teeth? Especially teeth through. I like the teeth through Halloween. The teeth has a very. I know you're a dentist, but it has a very Halloweeny look. Nice reversed head and shoulders on the daily Microsoft chart. Let's do some more. I'll glance at this one, but stocks. That could be yes, that would be an inverse head and shoulders. Remember, longer term, you still have the bearish pattern, but that head and shoulders is not triggered yet. That is an inverse. Shoulder, head, shoulder. That does qualify. Reversing this move. It has not triggered. It would need at least a daily trigger, and the daily trigger for this would be a close above the defining point on the neck, this neckline. That's a good plan. Sashi's headed for a walk. Thanks for shouting out Gary. Yeah, there we go. Gary's a good man. Thank you, Gary, for being a part of this community. All right, thank you for putting the question mark in front. Shaping up to be a wild opening 5-minute double top and a larger double, perhaps. I was looking at the Dow, didn't map it out on the ES. Let's glance. We're getting the opening right now. I didn't even get to Tesla. Who knows what's going on with that, with all the rumors flying around. This is not a double yet, but your reversal point would be above this 36.76 area. I just want to take the key support on the breakdown 36.62 area. Oh, this is now a very mini double, but probably not because it's going into the wicks here. It would just be a break play. I'd be very careful. I would be very careful looking at the, wow, look at that neutral opening in the tick. You want to talk about a neutral opening? You don't see this kind of opening that often. Look at this. I mean, I don't mean you have to see above like 1,000 or below it, minus 1,000, but this is a muted opening. Very mixed tick going into the open. Oh, wow. Little pop in the VIX. Again, the key levels you're going to watch for more sustained moves. I got to lean on more reversal moves that are going to try. The minor breakdown would be about 30. Then 29.90. But and then key would be for bearish would be above 30.42. My suggestion, take the day off. Really. Look at this range. This is very narrow. Wow. I'm going to be keeping a very close eye on this. So far, it's leaning to the slightly bullish side, but we don't have a lot of confirmation just yet. Oh, I would not get chopped in this mess. What a disaster. All right. You're welcome, Ramsafal. Sorry I don't have better news. You're welcome, MJ. You're welcome, Anissa. Chop day. Yeah. Big shout out to the Lurker crew. Thank you for being here, W Browser. Thank you for tuning in. By the way, shoot me an email, W Browser. There will be direction there. I will. That's a good point. Thank you for bringing that up, Christoph. Watch the European Open. It will alleviate some pressure. That can be a pressure valve going in the European Open today. Yes, it is a good day to sit out. Yeah. I'm going to jump now. Look at this. I mean, this is just a disaster. I'm talking just from a trading perspective, not from bullish or bearish. I mean, this is just, ugh. Ugh. Today's mantra is, may you not lose money. Little more selling pressure in here. I'd have to say a little more selling pressure than buying pressure at this point, but very muted just in the reaction. I want to check in with the NASDAQ. Oh. All right. I'm just not seeing much. I want to see just even crude is what a mess. Dollar index. All right, dollar index. I'm looking for something that could give a roadmap. If this pulls back down and forms a little double and then triggers that, then I can get into a slightly more bearish mode. You remember the big dollar sell-off we had that looked like yen intervention bouncing back though. Now, if this just triggers it without going to double, you can't use the double targets, but the key breakdown zone would be about 113.50. If we start trading above there with acceleration, I will start watching for more market to the downside. Looking like we're going to try to tackle that 3650 area again, though. Yeah, we do. This is not an. We don't have a lot of positive tick yet. Don't have a huge amount of negative tick, but it's leaning to the downside so far in the tick. Choppy to downside. All right. Let me look at Tesla. Since there's not much. Very muted. I wouldn't force a damn thing in this market. Oh, look at Apple. Look at these ranges off the open. Tiny, tiny, tiny. I mean, what else do we have? Let me look at the heat map. Sorry if I don't have more exciting things to go over. This is... All right, we still got Google and Meta. Even that. I'm going to keep it. If the market does get a slightly bullish tone to it, I will be watching Google for a potential gap play. I'd prefer Google over Meta. That's interesting. All right. Did Bitcoin mini double top? Not confirmed. That would just be a short breakdown play. Yeah, it's a mini double top. It's not confirmed or triggered. And please don't front run mini patterns today. That's not worth it. It's actually very rare. I'd say don't ever front run patterns unless you have another pattern triggering that will roll into the next pattern. And today would be a day you don't want to front run anything. Look at this. This is absolutely horrible. If you're trying to I'm not talking about micro futures, although you should trade micro futures for most account sizes unless you're a really big boy. This is just micro trading this unless you're trying to scalp, which sit out. Why? Ugh. All right, ticks slightly firming, but nah, chop day so far off the open. I'm going to scan a news feed and see if anything else pops up. Other than that, my hands might go numb. No, I don't think the bear market. Well, in what time frame, Gary? Again, bear market rally out the top. No, I'll tell you. You know what? If we don't get a substantial rally on, let me get back to something else. I'm just going to talk on a macro since this micro is a mess. Daily rolling over now, so we got downside daily pressure going into next week. We have weekly still turning up. When we get to the weekly to the top and rolling over again, with the daily coming down, going back up, and then rolling over again. So we need a full cycle rotation in the daily. We get daily and weeklies both to the top again. If there isn't any substantial run up, especially above this 3,800 level, then I'd watch out. So this is for the next couple weeks, what I'm watching from a macro perspective. Because we got mixed cycles now. So that's what I'm watching for the longer term. We got key earnings next week. Also remember, very key earnings next week. And so next week's going to be interesting. Then we got the election rolling up. We also have stock buybacks starting to kick in more so on the 10/28. So starting next Friday, so the following Monday, the 31st, you have buyback windows opening up again, which gives upside pressure. So, and then we'll be rolling the election out of the way. So it's all going to depend. These next week and a half, 2 weeks are going to be very interesting. Yeah, we got some big boys next week. Got mega caps. Next week's a big day, and so I'm just going to let option expiration get out of the day unless we get some kind of momentum coming in. But then I'm still not looking for a major follow through. Now, if we start getting spikes down here, especially below 1,200 with some momentum or above 1,200, I'll be watching more for momentum plays, but this is very muted. All right, I'm going to wrap it up instead of continuing to ramble. I shall talk to everyone later. If something happens big time at lunch, I'll pop on for a few minutes if anything changes. But if this stays sloppy crap mode, I'll just be back after the close. And so far, this is the pure definition of sloppy crap mode. DXY, yes, that is now. Thank you for pointing that out. Now you have something to watch. Why am I using conservative targets off this also, even though the trend is up? Because it's a sloppy day and this fits in nicer. See how this... Nah, I'm just going with this. The second target is the breakdown zone. So, but that needs at least a close, preferably a 15-minute, even though that's a 5-minute pattern based off the choppiness. I'd rather be more conservative, and it's a valid 15-minute pattern. So a 15-minute close above 112.90, 112.99. 113 is what my trigger point would be to avoid a fake out. So that's the thing that would tip this thing potentially bearish, with a return to the early morning highs in the dollar. And that would only be a return to the early morning highs. You want something to key off, keep an eye on this in the background. Crude actually getting a slight move on now. Crude could, maybe that's, Crude can hold this 85.41. That could be an interesting for a little play today back to 87 area. 87 is short-term major resistance. when do I think the bounce will come? If it's gonna come, we're gonna get it probably towards the end of next week, beginning of November. If we're gonna get, especially a strong November bounce. Next week's gonna get interesting with earnings, though. All right, wrapping this up for now. Thank you everyone for tuning in. I shall be back later today. Bye.